Hello everybody, this is another video from thetraderguy.com, and this one is a video about the dollar Swiss currency pair because here on July 28th I find it very interesting the last couple days movement. Now, as you look at it, you can't really think that there's too much interesting at first glance. I mean, it's a couple of small dojis, but it's not the candles so much themselves. I mean, they are part of the equation. It's not like I see this candle formation, I think, wow, what a perfect opportunity. But what I do find interesting is that we are currently at the 80 level, and we are hovering in basically about a 45 pip or so range. And the debt crisis talks continue to stall. So it makes you wonder whether or not the market is waiting for something. And I truly think they are. I think they're waiting for a result of the debt crisis in the United States, whether they resolve it or not. And the truth of the matter is it doesn't matter. The pair will go in the same direction either way. There's a couple different ways that I personally am watching this pair and how I plan on trading it. Scenario one is that we get a bearish bar that closes down below the 80 mark, perhaps on close of business Friday or Monday, because let's face it, not much will be done on Friday, more than likely, but there will probably be all kinds of political haggling and fireworks and everything over the weekend. Will the Congress pass some kind of deal between now and August 2nd? I still personally believe they will, but even if they don't, whatever, there's a way to trade this either way. So what happens is, let's take scenario one, and not much happens on Friday. We go through the weekends, and there's still a bunch of political posturing. There is the possibility that this pair falls down on Monday, or perhaps even on Friday, down through the 80 level, and closes below there. And if that's the case, that is a nice sell signal, because we have broken massive support at that point. The only thing is I truly want to wait until the second to see if the debt limit does get signed or get agreed upon, doesn't get agreed upon, whatever the decision is. And I think that's what most traders are doing at the moment. So it wouldn't surprise me to see another doji, another small candle here on Friday and probably Monday as well. Now, the debt limit is on Tuesday, so we'll see what happens then. There are a couple other things that could happen. Perhaps over the weekend they sign some kind of deal. They get an arrangement, whatever. Well, the market could very well bounce at that point, but we see, without a doubt, that 83 was support and acted as resistance, or at least something close to 83 did. So a pop here, at least for me personally, only invites me to short it yet again. So it's a sell in that particular situation. The one thing that could affect this pair in kind of a funky way and kind of slow down its descent is the fact that the dollar will get bid up against the euro in that debt ceiling issue being resolved, because then we suddenly have an issue where the world is probably going to start focusing on Europe again. Italian bonds are blowing out spreads, so from the Bund and such, and the spreads are getting higher. So as such, it looks like the world's about ready to punish Europe in the process. This will lead to more Swiss franc strength eventually against a multitude of currencies. And even though the trend into the Swiss franc has been absolutely ridiculous, it looks like it still has legs, because there are many reasons why this could happen. So to wrap this up in the dollar Swiss pair, I'm waiting to see if we get a daily close below 80 and perhaps a bounce and a retest of 80, which is very possible, and then I would short it then. Or I may wait for a bounce off of a relief rally in the debt crisis ceiling, and if it gets as high as 83, I would be very interested in selling it there. Notice how none of the scenarios that I laid out before you had me buying the dollar and selling the franc. I don't care how high it bounces off of this news. I have absolutely no interest in being involved in that knee-jerk reaction. The last several years of trading have taught me that those always are very short-lived. Unless you're very nimble and just happen to time it right, normally ends in disaster. Having said that, it is much easier to sit back and let the market do its thing and kind of question it here, maybe question it up here about 85, if it doesn't show weakness there, maybe question it about 90. I mean, by all metrics, this pair is in a downtrend, and you can see we have plenty of levels to pick from, as you can see on the weekly chart. That would suggest that perhaps there is a better sell spot. I mean, quite frankly, we could bounce up to 90. That's another 1,000 pips north of here, and that would only be a blip in the downtrend. So always keep that in mind when you're trading the dollar Swiss. And as long as you're on the right side of the trend, in general, things tend to work out much easier for you. Okay, guys, that was it. That's what I see in the market. That's the pair that I'm watching currently is the dollar Swiss. I told you that I'd be doing more of these. So that's it. Look for another one in a few days. When I see a chart that is interesting, I will bring it up. Especially, of course, I have to have time as well. But if I if I can marry the two ideas of having a chart worth watching and having the time to do it, I certainly will do it and post it up in the thread. Thanks, guys.